so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. You know that. It's interest rates and home prices are skyrocketing. And we're going to take a look at what that's actually going to do to the housing bubble that we're currently in, and then talk about when do we essentially think that the housing bubble is going to pop. Now, I usually wait to do update videos until Thursday because I wait for Fred economic data to update their average 30-year fixed rate mortgage on their graph. And usually I tend to trust Fred more because they get their data from Freddie Mac. But essentially this video is going to be about why it is such a bad time to buy a house right now. So we're going to look at all that stuff. And remember what I said, guys. I didn't say Q1, Q2, Q3. I said Q4 of this year will potentially be when it's time to purchase homes again, possibly some type of bubble bust, something of that nature. But it remains true that Q1 of this year is absolutely crazy still. Home prices are still completely out of control. The interest rates are out of control and doing very little currently to curb the demand. Obviously, that takes some time. So where I want to start today is essentially, let's kind of see how much home prices have gone up. Take a look at this snippet from an article that I read today on Realtor.com. Okay, guys, I hope you can see this. Here's what it says. Active listing prices in the nation's largest metro areas grew by an average of 9.1% compared to last year. Price growth in the nation's largest metros have been lower than other areas across the country, but much of this can still be attributed to a new inventory bringing relatively smaller homes to the market this year. So essentially, home prices are still going up, you guys. Value has increased this year. So things are getting worse. Obviously, the bubble's getting bigger and bigger and bigger. And home prices currently have not steadied at all. The pace is still completely out of control. We still don't have any inventory. And as now, interest rates haven't done anything. So what I want to do now is I'm going to switch over to the Fred economic data graph right now to see what the update is on the average 30-year fixed rate. Take a look. Okay, guys, so I condensed this chart from the beginning of this year, essentially. So this is what we're looking at, okay? So today, this came out March 31st. Okay, so as of March 31st, essentially what we have here is a 4.67% 30-year fixed rate mortgage, okay? Now that is up from March 24th at 4.42. So the average rates have gone up 25 basis points, which essentially means in 1 week period of time, 2.5% of purchasing power has been taken out of the market. But let's look at the month in whole. So as of March 3rd, the rates were at 3.76, skyrocketed to 4.67. That is a difference, you guys, of 91 basis points, which ultimately means a 9.1% decrease in the purchasing power of Americans. But again, I'm telling you guys, it's not enough. That has not stopped the rapid growth of home prices. And ultimately, all that's doing right now is it's inflating the bubble bigger and bigger and bigger and bigger. So essentially, when the bubble busts, which it will, it's going to be even more destructive. Okay. And remember this, the Federal Reserve is meeting in May and June, and more than likely each of those meetings, they are going to increase the federal funds rate or federal discount rate 50 basis points each meeting. So what do you think that effect will have on the mortgage interest rates? But now what I want to do is I want to look at an article from the New York Times that essentially kind of just demonstrates what's going on right now. And again, this is the worst time to buy a home in the U.S. history. But essentially, it's going to go into what happens when we have soaring interest rates and soaring home prices. Let's take a look. Okay, this is from the New York Times, you guys. It has been 40 years since rates have risen like this alongside similar home price growth and high inflation. This time around, the United States also has a severe housing shortage. And then there's a new uncertain dynamic, the sudden rise of working from home, which has the potential to change what home buyers want and where they live. It goes on. Nobody really knows what's going to happen over the next year, Mr. Siller said. That makes it hard to predict when rates might start to act as a brake on rising prices. So in other words, you guys, that's some super bad news. What we want is we want things to stabilize. We don't want some violent pop where there's, where essentially the bubble's strong enough to keep growing and keep growing because we have a shortage of supplies. If it wasn't for the shortage of supplies, I'm pretty sure that everything would be balancing out more naturally. But the problem is we have a massive shortage in supply, and a little bit of that is institutional investing. I've read numerous articles where there's millions of homes right now in the housing market that are sitting abandoned. That's a video for another time. Let's go on and see what the New York Times has to say. Among a subset of mortgages backed by Freddie Mac, the monthly payment new buyers are making has risen more steeply since the start of the pandemic than any time in the last 25 years. That shows you the compounding artifact of both rising rates and rising home prices. The chief economist of Freddie Mac said, "We've had episodes of each in the past, but not this intense for both at the same time. Early in this pandemic, falling mortgage rates enabled rising home prices and offset them in monthly mortgage payments that remained steady through much of 2020. But with both measures rising at the same time, monthly payments can escalate quickly as they have in some." So you guys, we have all of this record-breaking things going on right now. The reason why there's so many differences of opinions, you guys are probably hearing all kinds of crazy differences of opinions when it's coming from the real estate market. The reason why you are is there are so many things happening at once. And quite frankly, nothing in the history of the housing market or economics has happened quite like this, which is why I'm always telling you guys, listen to many people's opinions so that you can make an informed decision, because there's so many different situations and so many reasons to buy, so many reasons to sell. But one thing that I really want to make clear to you guys that is really undisputable, whether or not you think we're going to have a housing market crash, we are absolutely in a housing market bubble. Okay, we are absolutely in a bubble. That is essentially undisputable. I hope you guys can at least acknowledge that. And not only are we in this massive bubble of equity growth, surging interest rates, surging inflation, property taxes, school loan, EIDL, food prices, gas prices. We are in a situation to where something bad, I think, might happen if we're not prepared. Let's go on and see what New York Times says. Rates and home prices could well continue rising together for a number of reasons tied to high inflation today. Rents are soaring now too. That means the alternative to buying isn't particularly appealing either. I would argue it really never was. And in a time of high inflation, buying a home and locking in today's monthly payment for the next 30 years is a good way to shield yourself from rising rates. Now, here's the thing, you guys. I've been trying to make this point for a long time. I would rather have a higher interest rate than overpay for something drastically and then be trapped in the house upside down in equity. If I lose my job, I'm trapped. I can't sell. I can't pay my mortgage, equals foreclosure. Let's continue. For would-be home buyers, the alternative is both the rental option as well as the option of where do you put your money. Okay. During past periods of high inflation, real estate has tended to be a better asset than other kinds of investments like stocks. So, you guys, do you see how there's so many things compounding? This is why there's such high demand. Usually when there's periods of inflation like this, people and investors dump money into the real estate market. And I think that's what you're seeing. I think that's why there's so many abandoned homes throughout the US. I believe those are investors that are essentially buying something so that they have a come up on their money. And everyone knows real estate's a pretty solid investment, except times of bubbles. But this is really, really crazy if you think about it. Let's go on and finish this article now. Mr. Gupta warns that rising rates can also make rental inflations even worse because it pushes more people out of the buyer market and into the rental market, driving demand there. In a kind of feedback loop, those ever rising rents will also continue to put pressure on people who can't afford to buy instead, even at higher interest rates. So you guys, we're in some pretty deep trouble. Even the rental market right now is completely bananas. It's completely out of control. And again, that is why I keep telling you guys, essentially, you guys really need to monitor your finances and change your budget. I believe a lot of people, not all people, but a lot of people, and that's who I'm talking to, got even more reckless in their spending through COVID and through the stimulus and child tax credits and all of these monies that we were getting from all over the place. You guys, it is now more important than ever to rebudget and to save as much money as possible, because there is inflation coming at us from every single angle. And the interest rates being risen like this is not yet enough to slow down the housing market. So naturally, that is also going to affect the rental market. You guys, I'm really nervous, okay? But I truly believe most everyone can make it out of this, ahead and a winner, so long as you get disciplined right now before it happens. The mistake that people are making is they're planning accordingly after the fact, okay? I don't know 100% if there's even going to be a housing market crash. I don't know 100% if there's going to be a recession, okay? But I do believe those things. And because I believe those things, I'm taking preparation. Why not prepare for the worst? What's wrong with that? So please listen to what I'm saying, you guys. Try to decide what's best for you. I still think it's a great time to sell, so long as you don't necessarily buy. But, overall, my opinion is this. Some people have to buy. If you still want to buy, that's fine, but definitely purchase a home with the right mindset, which is a long-term 7 to 10-year hold. You may lose some equity in the process, which is okay usually, as long as you hold it. But also, huge opinion here, do not go broke purchasing the house. Have money left over. If you're one of these leveled up buyers that has just sold their house, have money left over just in case we go into recession and we lose jobs in our job market. Okay. You want to prepare yourself accordingly. That's the point I'm trying to make. But regardless, you guys, if you're out there investing in real estate, I wish you luck and I hope you win.